Hey guys, my name is Matt Cordova. I'm starting this YouTube channel called Simplified Finance. It's gonna be interesting. I've never really done one of these before. I probably am gonna mess it up a couple times, but that's the whole point: learning and grow. The goal of this kind of YouTube series per se, it's going to be focused on how can we simplify the finance world? I'll be honest with you, there's a lot of good information, sometimes bad, that's thrown out there for everyone to kind of see and consume, whether that's going to be on YouTube, Instagram, Tik TikTok, whatever it is. There's always going to be something or somewhere to kind of give you advice. And I think a lot of people don't realize that we can find a way to condense that information in some format or some structure. And here the purpose of this videos are going to be to determine how can we grab most of that information using my own experience and at the same time my personal finance or financial situations per se, and see how we can apply it to my life, but also what we can learn from it too. Some of my learning curves, some of my mistakes, and what are some things that we can kind of do to kind of see and grow together. So the purpose of this video is going to be mostly focused on what's my current status. I'll be making more um, charts on the videos, more information that can help you guys in a more visual way. I know I'm going back and forth, but you know what they say, it's about practicing how to talk to a screen. So let's begin. um, so obviously the goal here is how can I kind of retire as fast as I can as fast as I can, meaning how can I save most of my income per se. So let's kind of enough about me and talk about kind of my portfolio, what's the point, what's the growth, what's my goals, and kind of see from there. So as you can see here, I'm not sure if you can see my mouse, but I see there's around like $17,000 for myself right now. It would have been doubled if I didn't do some certain things that I kind of learned from the mistakes, you know. So let's look at my long-term portfolio. That's just specifically an individual brokerage account, not a Roth IRA, 401k. It's just a normal one. As you can see here, I am up $2,000 from that includes market gains and dividends for this portfolio. On a year-to-date basis, this is June 18th. I am currently 23% up, over $1,000, 1.6k up, $81 of dividends, and 1,562.81 due to market gains. I've been slacking on actually putting money into the account, so gotta do that. Roth IRA, I'm year to date, I am currently at 15%. Usually my Roth IRA is a little bit more conservative, but I'll dive in a little bit more on what these numbers actually mean. I do have $500 kind of in buying power, which should buy in for our Tuesday, not Monday, Tuesday. Currently market gain 880, dividends at 93. I'll kind of dive into what are such a big differences on my long-term and Roth of kind of like return rates. I call it retired by 35. Obviously, I'm not going to make it probably by that time frame, but it's more of like a goal in mind that I would love to have at some point. Okay, so let's begin. Now, if we go to the all-time chart here, there's a couple things that did happen and occur during this time frame, so I can explain why are these such big jumps. One of the biggest jumps are going to be around, I believe, in 2020. I had cash for going back to school, so I did graduate with bachelor's degree in finance, but I did need money. I needed the money to pay certain things, so it was more of like an investment to myself to take most of the dollar amounts just paid back for my kind of my debt here per se. Now, for throughout 2020, I would basically invest little amounts. I was still kind of working during college and still kind of I had this account, I had a trading account at the time. and just letting it kind of ride per se. Um, Around this time, I got a tax return for a good chunk. I was like, okay, let's go ahead and add dollars. I did have a lot of cash saved up in my other account, so I decided, you know what, I'm gonna just throw everything into this one account for now, because we were trying to buy a house for my mom. My sister and I, we were like, hey, we want to kind of buy a house for mom, so I was able to kind of raise the account to this specific portfolio on like 18 grand. Um, as you can see here, payments started coming out, and then most of my payments went down, and my account was left with $7. So this was more of like my money, giving it to my mom as a down payment for a house. Now I gotta build it up again from scratch. Um, 2022, I currently was starting my role and try my best to build it back again. And then of course 18 grand is the number that for some reason I just tend to just sell my assets, which is obviously not great. This one was for a good reason, for a house. Unfortunately here, I'll be honest, not my biggest situation. I bought a car, um, because currently I still live at home, so I'm still saving money from not renting or buying a property and paying mortgage per se. But I needed a car, and I needed to use it for travel. I do work from home. I was always trying to find an excuse to kind of get a car, um, and yeah, I have to use it for a down payment, and pretty much I have not been putting dollars or anything to the account since January. I've been letting this just ride and kind of grow by itself, and it's obviously doing well, but need to continue to grow on that. Roth IRA. So my Roth IRA is in a situation where I actually, 2022 is when I started growing it. I obviously am not taking any money from this account. It's going all to my Roth IRA. Important if you don't have one, I'm suggesting you to really get one. I'll kind of go over it real quickly for my Roth. It's more concise, um, a little bit more awareness of the risk, making sure that a little bit more conservative here, because it is a retirement account that I am looking to do in a long term. Um, use this money eventually, right? So I do have a market section where it's just pure ETFs, internet, total stock market, U.S. ETF, and international market ETF as well. I do have JEPI. Again, I'm a big fan. I'll kind of dive in later, of course, of like why am I choosing these stocks, but just kind of a brief rundown. JEPI, same idea. We were currently at a really bad time, for the market per se, when interest rates keep coming up, fear of recessions. I'm like, okay, I need to find something more stable and also bring in more money into my portfolio. Let's bring in JEPI. Obviously, JEPI in itself, it will not do well compared to the market. Um, like if it's not really volatile, I mean, it stays around the same price. Now, for example, if the market jumps like 20%, JEPI won't climb a lot, right? But it will still provide that dividend that you need. So I needed a way that the market was choppy, very, looking towards like a bearish market. So I'm like, okay, I want to still buy into the market, but I still want to keep my cash working for me and not dying to inflation. So I'm like, okay, let's just use JEPI. So that's what I used. That was kind of my technique, which was able to provide me good returns for now. Tech, I do have a couple. Similar to my previous portfolio. I have Tesla, Google, Microsoft, Apple, AMD, Nvidia, Salesforce, Visa, Mastercard, and Adobe. Consumer, I have a lot. I like consumers. As you can see, I do have Pepsi up here real quick, higher than Coca-Cola, Disney, Starbucks, Netflix, Spotify, Procter & Gamble, Hershey's, Nestle, and General Mills, and I did recently add McDonald's as well. Finance, I have like the three big: Bank of America, JP Morgan, and Schwab. Retail, I have Amazon, Costco, Lululemon, Home Depot, and Target. insurance type health, have Cigna, Johnson, Travelers, Abbey, and United Health. And I had a other section because I didn't really know like what to really call it per se, but I did add Berkshire, BlackRock, Chipotle, Waste Management, Caterpillar, Airbnb, Yum, and Etsy. So that is my portfolio. If so, for my long term, it's more of like a risk investor here. I do like to have a little bit more risk on this account than a normal, like a Roth or a 401k account. So let's go kind of section by section to kind of talk about, hey, like what do I have in these? So I kind of labeled them in like different slices or sectors per se. I have my tech, consumer growth, income, finance, real estate, energy, risk, healthcare, industrials, and utilities. I was planning to maybe consolidate a couple of these because it's not really, to be honest, not really low dollar amounts. So I think it's good to kind of simplify, but also diverse a little bit more with different ETFs. But you'll see here now. So for tech, a couple of companies I do have here are going to be Apple, Microsoft, Nvidia, AMD, Visa, Mastercard, and Lockheed Martin. I kind of dive in a little bit more later on each sector if you want. If this video does well, or people are interested to kind of say like, hey, like why are you choosing these type of stocks for these specific sectors, then I can definitely kind of dive in later. So for consumers, I do have Costco as my majority part of the section here, and then Starbucks, Disney, Spotify, Pepsi, Comcast, Hershey's, PG, Coca-Cola, Home Depot, Target, HP, Nike, Meta, Yum, and Adidas. A lot, I know, it's a lot, but those are my for the consumers. My growth, I do have Tesla as Amazon, Google as kind of my three. Obviously, I would prefer to have Google in the tech sector, but I wanted to keep it for now in the growth. I can probably change that later. Intuit, Netflix, Airbnb, Salesforce, and Adobe for my growth. Income, I love Jeppy. It's great. It helps me bring in a little bit more of a cash dividend so I can reinvest into these different companies, which is why I use this more as like, don't have it as a good buck of my things that I need to put into this high dividend yield. It does provide like a massive yield, like a 10, like 11%. Expense ratio pretty low. But I use most of this dividends to reinvest back into my main portfolio. Finance, I have Chase, Bank of America, Schwab, Berkshire, Royal Bank of Canada. Real estate, Schwab, a US ETF, AMT, and O Realty Incorp. Energies, I'm going to have Chevron, Exxon, and BP. And for my risk, I know it's great, but I do have a risk sector just so that I can maybe see what I can get from here. Obviously, this sector, I'll be honest, I'm not really gaining anything. As you can see by the chart here, it's not been doing so well, and I expect it to be not do so well. So I did have AMC, Lucid, Rivian, Etsy, Sony, Coinbase, and I am adding PayPal's to be as one of the biggest one. Why is this in the sector risk section? Because I don't really know the perspective of where PayPal or these other companies are going to be now, especially after this Fed now, or the Federal Reserve creating this basically bank to have access to funds at a more protected level, and people can come to, well, why should we put money into these companies like PayPal, who are not insured, and now we are looking at the Fed now, who could insure all our money, and we'll be pretty good, right? Unless they screw up their UI, then I put PayPal in its risk sector. It's sort of low price, pretty low price at the moment, but that's why I kind of put it there. Okay, so I do have healthcare. I did put like Johnson, Pfizer, AbbVie, UNH, and industrials, waste management, Caterpillar. I think these are the two core ones that I'm probably going to keep. And then utilities, these are just utility companies that I have here as well. So that is my portfolio. If you guys want me to kind of dive in on each sector, I can also, my plan was to see how I can show you guys One, like, hey, like what my income, what obviously disclose to, hey, like what's my cash coming in, what are my expenses, what are my investments, because I think the whole purpose again for this channel is to help people know that we are in a weird situation where money isn't just it's a very taboo subject still. um, People are more open to it. I'll be honest. People are more open to, like, hey, like this is my situation. Here's my clarity, and I think that's fantastic. I've always been an advocate. Like, listen, if you are having money problems, you're struggling. Like, how can we dive into them and break this down? I have student debt. I have a card debt now. Um, I have debts of credit card debts. Like, so okay, now how can we, based on my income, break it down and how we can tackle these on one by one, and also increase our generational wealth, right? Because we don't want to just be wealthy for ourselves, but want a great generation wealth for our future families and kids and their kids. Um, so that's the plan here. Hopefully, you guys liked it. Um, Feel free to kind of subscribe. Everything's gonna be free. I'm not gonna hide anything. I'm the most transparent person. If you guys have questions, like, hey, like, can you teach us a little bit more about day trading and what your day trading looked like, how you learned about that? If you have more questions about my portfolio, I can dive in. I also share kind of like a link per se on my portfolio so you guys can see like any changes that I make. But yeah, that would be it. Well, hopefully you guys have a great day. It is currently 1 a.m. because I have been inspired and I couldn't sleep to um, help you guys and also kind of track my own progress too. All right. Hopefully, you guys have a great night and hopefully, have a great day as well. We'll talk soon. See you guys.